Live from the rooftop of the Hermann London Real Estate Group in beautiful downtown Maplewood, it's the St. Louis Realtor Podcast with your host, Adam Kruse.
Welcome everybody to the St. Louis Realtor Podcast live from the rooftop of the Hermann London Real Estate Group. Tonight's episode is podcast number 34, all about homeowners insurance. We've got some amazing guests. We've got my co-host, Shannon St. Pierre. And I'm finally going to start saying it more normal for you, Shannon. And, of course, our special guest today, Tony Berra, Tony Berra.
Thank you.
With Liberty Mutual Home Insurance, or
Yes.
Liberty Mutual Insurance.
Liberty Mutual Insurance, correct.
Liberty Mutual Insurance, okay. And we have got a lot of questions for you tonight. I know we emailed you about 3 pages of small type,
Yes.
small font.
I do
Thanks,
apologize.
Shannon.
Yes,
Yeah.
yes.
But as realtors, we deal with insurance a lot and insurance agents, and we know you guys are always changing the rules up on us
Yes.
every time there's a big storm somewhere.
We don't
Right?
like you to truly know what's going on.
Yeah, exactly. Well, tonight we're going to find out what's really going on, and Shannon has really prepared a ton of great questions for us, so I'm going to let you take it away, Shannon, if you like.
Thank you, Adam. Yes, I think that we'll just dive right into this just because
Okay.
I do have so many questions that have come up, let alone just even reading through the policy. And yes,
sure.
I actually read my policy.
Wow.
It's like, 47 pages or something?
It
in
is.
there?
It is.
Yeah.
But I'm also one of those people who will read the inserts that you get when you get a prescription filled. I'll read the whole thing.
Yes.
And then half time I only take the medicine because then I'm like, never
Yeah.
mind.
So it's not
I'm
bad.
out.
Anything
I'm
out
done.
there? You got a little bit of the engineer brain in you. They're very
A
detailed.
little bit on that. So let's just dive right in. What is typically covered with homeowners insurance and what's not?
Okay, so standard coverages on your homeowner's policy is going to be the dwelling, obviously, which is the most important, the home itself.
The building.
The building that
Okay.
you live in, that all your kids and family and dog and all your belongings are in. That's obviously the most important. Other than that, your second thing that's going to be covered is other structures. Now, that being said, not everybody has other structures in their house. You know, that's some people, it's for a shed or a gazebo, maybe it's off in the corner of the yard, something like that, a detached garage that's on the corner of the property. Not everybody has other structures. That being said, typically other structures accounts for about 10% of that dwelling amount. So
could you eliminate that to
no, you
take
can't.
down?
It's always going to be 10%.
Okay.
It's just built-in standard with almost every policy out there.
But what you meant is, can you just not get insurance coverage for your gazebo? Is that what you meant?
Yeah, for the other, quote unquote, other structures is how they phrase it.
And he's saying no.
Can you
Correct. It's
eliminate
already-
that?
it's
or
already
eliminate that? Because I don't have another structure.
Either do
say.
I.
Okay.
You
But
know,
you're
it's-
both still paying for it?
Yeah, but it's already baked into that initial dwelling amount, so it's not costing you anything extra for that 10%. They just make it 10% of the actual dwelling or the home itself.
Okay.
See what I'm saying?
So you're only technically paying 90% on your home and 10% for your other dwellings.
If you want to look at it that way, you can.
Okay. Just trying to, we're going to dive deep.
No, absolutely. I'm totally fine with that. Something else that's covered on there is your personal property. The basic way I always explain it to everybody with your personal property, if you were able to take the roof off your house and turn it upside down and shake everything out, that's all your personal belongings. Your clothes, your furniture, your silverware, plates, stuff like that is all going to be covered under your personal belongings.
Okay, and we have a couple questions specifically for that as we go on.
Okay, yeah, totally fine. I'll be ready for them.
So can you customize your coverage? So can you, in order to help with the premiums or bring down costs, can I say I only want to cover my house for what it would cost me to pay off my loan, say, or all the way up to what it would cost to actually rebuild my home? Is there a range like that I could request? Because I don't think people even think about that. You
Correct.
just call up insurance agents and you
Yes.
say, hey, I need a home quote.
Yes.
But is there that range at all?
There is. Most of the time, what's decided on the value to rebuild your home is built with a cost calculator, and that's specifics to the home. So you're going to get very detailed into room by room as far as the percentage of hardwood floors you have in the house, with the granite countertops, stuff like that. You got finished basement, wiring down there, sound studio, all that stuff's going to be in the dwelling. And now what people don't consider is a lot of times Say if the replacement cost is $250,000 for their house, but they only paid $175 for it, they say, well, I want to only insure it for $175. One thing they don't consider is the amount it costs to rebuild or fix those things when something happens. So you got to think, if a fire burns half your house down, you're going to have to bring crews in, you're going to get roll-off dumpsters, you're going to have crews in there taking all that debris out of there, and that's all figured in the cost of that. So sometimes it's usually higher than what most people think their home's actually worth.
So about that, I've heard an insurance person say that you really want to get coverage for the rebuild cost, because it's possible that if your home burns down, that someone, I guess the city, would make you rebuild. Is that true? Or could you just be like, oh, take the money and go?
Well, typically, from my understanding, if it was somewhere in the city like that, it'd be responsible. You could take the money and go. But I think as far as being a eyesore or being something that would be a liability for someone to come on.
You have to at least clean up the mess, but you could just leave a lot.
Correct.
Lot.
Correct. You could do that.
Okay. Shannon, it's so interesting to me that a $150,000 house in the city, all brick, built forever ago with the 3 brick wide walls, the insurance for that could cost more than a $300,000 house in Chesterfield, right, with stick frame built. I mean,
you're
I'm just
absolutely
making
correct.
Numbers up,
yes.
But it's so interesting that the insurance would be different.
Yes.
And it's because of the rebuild cost, not necessarily because of the location, I don't think.
Yeah, and that's typically baked into a homeowner's policy already, the 10% for ordinance or law. So obviously, building codes are ever evolving, ever changing. That's to make sure that your house is going to get put back up to code with what the specs are for that specific area. So it's things on an older home like yours, Shannon, might not have been to code back in the day, but now are grandfathered in because the house is so old that it's been there. But for what if it would be demolished, that 10% ordinance would be allowed to update everything to the proper wiring, if they require so many outlets per wall, a different type of insulation in the ceiling as opposed to, some of the older homes having asbestos and stuff like that.
Okay. So going back to that scenario, if someone's house burns down, or here in the city, you see a lot of brick shells that are burnt out, and they just take the money and go, who's responsible for that property? Does the insurance company then own that building, or does the homeowner still own it and they...
A lot of times end up the city takes over the vacant properties. And
but is that only after they don't pay the taxes for 3 years?
That's a great question.
I would think the people would still own the property. It's still my property. You gave me the money to rebuild it if I wanted to. If I choose instead to take that money and go buy the house down the street, I think I would be totally allowed to do that. But what he was saying earlier was that the city might come in and be like, excuse me, can you please clean up this trash that you have on this lot?
You can't have a hole in the ground with rebar sticking out. Right. I mean, that's good.
This is a danger.
That's a liability issue, and then you could potentially be sued because it is still your property.
Okay.
Yeah.
I still think that's a really interesting, because you do see a lot of burnt out buildings that just
and a lot of times the city doesn't
want to...
Yeah, they don't want to spend the money whether to tear them down or whatever, so you see a lot of these boarded up. You get riffraff, anybody that might break in, or kids move and vandalize, and sometimes all of a sudden you hear on the news a vacant property burnt down again.
So how much homeowners does someone want to get? With auto insurance, say there are state minimums.
Correct.
And I can call you up and just be like, give me the minimum. I want to keep the cost low, but that doesn't necessarily serve me the best.
Correct.
Is that the same case with homeowners, or is it because it's a dwelling, because we have mortgages on it, where
it is? It's going to be your largest investment. Your home is always your largest investment. And me and Adam kind of touched on this a little bit earlier as far as what was needed, and he just mentioned about you always want to insure it for what it costs to replace the home. I always recommend that to all my customers. And yes, a lot of times with working with different lenders, they have to have DTI, being in there for someone to qualify for the loan. So that being said, then maybe they can't do the extra coverages like the earthquake or the water backup initially, but that can always be added after the fact.
Okay.
But I mean, you're protecting your family. That's where you and your family and your kids spend most of your time.
Okay.
I mean, it's the most important investment to you guys.
So let's talk about that flood and earthquake
Correct.
insurance.
Okay.
Because flood is not part of it.
No.
Earthquake is not part of it.
Correct.
And I don't think people necessarily think about earthquake insurance, even though we're on a fault here in
You're absolutely
St. Louis.
correct.
And I don't know if they think about flood insurance until it happens, like what happens down south every time it pours.
Yes.
So
People should obviously get that, most likely, right? But
yes.
How much is the pricing difference in general? Or how much is it extra to get flood or to get...
Well, typically, not everyone can just go get a flood policy. You have to. It's all regulated by FEMA, by the government. So no matter what insurance company you're with, that's all determined by zones and being in a floodplain. And sometimes, even far as realtors or lenders, that might be a requirement that has to be. You have to get flood insurance on this property.
But if I've got a big house up on top of a big hill, you wouldn't be allowed to sell me flood insurance?
Nope.
Okay.
It's
it has
all
to be in the floodplain.
Correct.
Which FEMA has their flood maps that change occasionally.
You are correct.
Okay.
That's all government regulated across the board. Doesn't matter who you're insured with.
Wow. Okay. Does it have to be in the 500 year, the 100 year, or the whatever?
It's typically the 100 year. I think that, like I said, that's forever changing too with the government as far as regulations. With the flood, you would have to contact FEMA directly to find out if you'd be eligible with that.
And then, sorry, I'm just asking all these
Go
questions.
ahead.
Normally, like let's say that your property is an acre and your house is just right in the middle of it, but the floodplain goes through like the back corner of your
Even if it
yard.
touches two trees in the corner of your yard.
If it touches anything in the yard, then you have to get flood insurance, or at least you're allowed to get flood insurance.
You are absolutely 100% correct.
Okay. Wow.
So with earthquake, though, you can't, but not all insurance companies offer that.
Correct. Earthquake typically with us is 15% deductible of the house. So you got a $100,000 house, your deductible is going to be $15,000 to replace that home. That being said, you have an earthquake, like you said, on the New Madrid fault line. Your house splits in half. Obviously, can't live, but your deductible then is 15% of that to have the home rebuilt.
So it's your earthquake deductible is going to be 15% of what they're considering to be the rebuild cost.
You are correct.
Okay. So on the other examples, we're like, oh yeah, baby, make it the rebuild cost, because I would just take the money and go build a cheaper property probably. But in this case, it's a little bit of a detriment, I guess, that the rebuild cost is so high.
Correct.
But the earthquake insurance must not be that expensive then, if your deductible is so high, or is it? It's
more expensive with someone like your house, Shannon. The brick homes are typically more expensive on the earthquake side of things as opposed to the siding. It's also zip code related, obviously, like you said. For us to live here in Missouri versus someone that lives, a lot farther out in Kansas, or as you get away from that, it might be more reasonable.
Okay. So I was starting to hear, though, that earthquake insurance was going away, and it was a lot of insurance companies were not offering it anymore, and only if you had it previously and grandfathered in. Does any of that ring true?
It does somewhat, and a lot of times now there's other companies that are actually popping up that only specialize, that allow you to buy a standalone earthquake policy. That's what they specialize in. So if a company's not able to offer it, there are some other options out there that they can still get earthquake insurance on their home.
Okay.
That being said, they're basically taking the gamble as far as offering that product that...
Nothing's going to happen.
Yep.
Because then they're out of business.
Exactly.
Okay, so let's go to filing small claims. Okay. So if something happens to the house, that's maybe $2,500, $5,000. Not exactly pocket change necessarily for everybody, but what is the threshold for filing small claims? How much does it increase your premium, and for how long?
It's typically a 3-year period. There's not exact science behind the percentage what it does increase.
Okay.
For that year, obviously depending on the claim. But I always say with claims, you have insurance there for a reason. So why not use it? That being said, sometimes somebody's going, hey, I have a couple properties. If I have to pay $2,000 out of pocket to fix something as opposed to paying $1,000 or $1,500, I'll just eat that cost to not have the problem of the homeowner's insurance claim. $2,500 to other people, that's quite a bit of money to have to come up with. So if they got a $500,000 deductible in that situation, they'd be better off just paying for that insurance to make the claim.
And they're kind of gambling, right? Because if you have a problem, I don't know what the problem would be, a roof issue or something like that, you would think that you'd be better off going through insurance, paying towards your deductible. So if later on that year there's another bigger problem, you've already prepaid part of your deductible.
Well, it's specific per occurrence.
Oh, it is.
So it's not like a savings. Like you can't just say, well, I paid.
So is that different? Like with health insurance, aren't I sort of like paying towards my deductible
you are.
a year?
You are.
Okay, that's different with homeowners
You are
insurance.
correct.
It's per claim.
Per occurrence, correct. And the nice thing with us is that, sorry.
Yeah,
Hey, we're on the rooftop.
Yeah.
Right?
There's ambulances flying down the street. So the nice thing about Liberty Mutual and with what we do is people have that angst about having a homeowner's insurance claim. Is it going to be worth it for them to do this, that? How much is it going to cost? We don't ding you for a $0 payout. So if we have someone come over and take a look at everything and they're saying, hey, Shannon, it's actually would cost you about $900 to get that fixed.
Okay.
They're at least giving you that advice, and it's gonna show up as a zero pay claim. However, we are not going to ding you for that. Other companies out there may, if you would switch insurance, would say, well, you have a $0 payout claim. But the nice thing about Liberty Mutual is we're not going to fault you for that claim.
But so in general, you can be dinged by if you've made specific claims, like you just said, you called it a ding.
Yeah.
Then you can get dinged, but also you could get dinged by if Joplin has a huge tornado and now everyone's going to get dinged. Right?
Yes.
Okay, so you can get dinged both ways, I guess.
And that's a funny thing about insurance. It's a giant bucket of money that we all throw into annually, with our premiums, and we hope it does have to get spent. Mm-hmm. But that being said, like you said with Joplin, the ripple effect's going to be in that for that state.
Yeah, I think once Joplin had that big tornado, that's when the whole rule came in. Now that no one will insure homes with roofs that are older than 19 years old. Does that sound familiar?
Yeah, typically a lot of times if it's over 11 or 12 years old, and I think this was one of your questions in here, Shannon, about the roof, it's actually becomes just like the Blue Book value of your car. It becomes a depreciated value, an actual cash value, as opposed to a full replacement cost. So they're going to assess what your roof is worth at that time. If it's 15, 16, 18, 19 years down the road, they're going to say, well, this roof is only worth $3,000, so they're only going to give you that cost. You're going to be responsible for the difference of that. You're getting a basically Blue Book value of your roof.
Okay, so but only once it reaches that specific
Correct.
11 or 12 age. But up to that point, you could get a whole new roof.
Yeah,
100%.
your full replacement cost.
But every year after that, there's that depreciation.
Yep.
And say my roof costs $10,000 to replace, and it's 20 years old. You're going to give me $1,500.
Yeah, whatever. We're
Yeah.
$3,000. I mean, let's just call it that in there. It's not going to be what it's going to cost to replace it.
Yeah.
That being said, I mean, you also gambled that, I'm just going to leave us on there. There's no water spots on my ceiling. Let's ride this thing out. So you've kind of been going back to your savings type thing, Adam. That's a way you work up that savings account, saying, hey, well, I've also haven't made a claim on my roof, or I've been saving this money, every year by doing that.
Okay. So do you penalize at all for people who call and say, I think I might have hail damage, and you come out and you're like, no, it's not hail damage. It's just old roof.
Yep. Yeah, no, we don't. That's what I said, there's zero pay. We're not going to hurt you for that.
But that's still what you consider as zero payout versus
Correct.
Like there's nothing there. You did nothing except come.
Correct.
Because they probably have a roofing company that would come out for free.
Yeah, we have inspectors that are come account that specialize, and they can tell what it's caused from.
Okay.
A lot of times you get someone that maybe it didn't get caught when they purchase a home, that something was dilapidated in the corner, and then someone's going, hey, I think I got hail damage on my roof, and they're like, actually, no, this was a Band-Aid was put on this. They put some extra shingles in this corner.
Yeah.
This is pre-existing, damage as far as that goes.
I'm excited for your next question, Shannon.
I am
Save
too.
some money.
Yeah, let's talk about premiums because I feel like there's so much that goes into premiums. Like it's almost like Google Analytics and SEO. Nobody ever really knows the full calculation, even insurance agents.
Yes, we don't.
But what we do know, or what I've heard, are things like your personal credits.
Yes.
Which I don't know that people are totally aware of. Previous claims.
Yep.
Is that on the current house, previous homes,
Yeah, it's
renters, anything?
Correct.
It
Even
follows
auto?
the person, not the house.
Yes, sir.
Or it follows the person, and you guys also follow the house.
Yeah, because that's all going to be pulled by your name, address, your former addresses, your social, stuff like that. That's going to come all up on when we order a report on a property.
Okay, so occupation, house alarms, like what affects premiums? When you get a new applicant, what are you asking for so that you can help determine what their price point will be?
Typically, like you said, one of the major things is the person's age. That's going to be, and when you talk about that, everybody's thinking, well, why should that make a difference?
Yeah, I was thinking, what the world does that
wait a
have to do
minute.
with it?
Well, it's in essence a responsibility chart, let's call it. So if you're a first-time home buyer, you're 24, 25 years old, you're probably one that tend to entertain a little bit more. You may have the likelihood of something possibly happening.
I think I would disagree, but go on, Anthony. Go on.
Well, and that's what I mean. And taking into consideration, a lot of times your credit's not, what it would be as if, our parents' ages. A 56-year-old who's been building up their credit for a long time. This is the first major purchase for them.
My dad just loved you.
Did he?
50 or 60 years old. He's like, yes, that's correct. Yes.
But I don't think it takes that long to build up your credit either.
No, you're more established. So obviously your address, your age, I know you were getting an occupation. Why should it matter? If somebody that has a different, a job that doesn't make as much money but is fiscally responsible, as opposed to someone who makes a lot more and is irresponsible, and goes out and buys things and runs up credit card debt still because they live, in a lavish lifestyle.
So there is just like some sort of big, huge algorithm you guys use.
Correct.
But then you can save if you have things like smoke detectors,
typically
alarm system.
Like being married, that benefits you. Also having multi-policies with it. A standalone home policy is not, you're going to get discounts if you want to do auto insurance with it, if you want to do life insurance, so there's other discounts that are applied by kind of bundling everything together, so to speak, when it comes to your homeowner's insurance. Okay. Zip codes are taken into consideration. I mean, like you said, there's a huge algorithm. It's a lot of factors that's unique per situation.
There's a discount if you're a realtor, isn't there?
Correct.
Love
yes,
that.
So if you ask for it, Anthony does apply it, but it's only through Liberty Mutual.
Correct.
Oh, okay.
So Liberty Mutual actually has an agreement with SLAR.
Yes.
No, National Association.
Oh,
NAR,
National
NAR,
Association.
Yes.
NAR, sorry,
Mm-hmm.
yes. So National Association of Realtors.
Okay, but if I install an alarm system, I'm going to save a little bit of money.
Correct. And the misconception there, it's funny, I just dealt with this personally a lot of times. The alarm companies, they said it could save you 15 to 20% on your homeowners.
Mine says 20.
Yes, that is not true. That is a very old, think of more in the 80s when nobody really had alarm systems, now with the ever-changing technology with you can hit iHome on your phones, and stuff like that. So it's a lot more common. So obviously the discounts at not as steep as it used to be. You do still have some savings on the home, though.
Well, do you mind if I ask Shannon, while we're talking about savings, I'm under contract to buy a house right now. And
congratulations.
It has a pool. Thank you very much. It has a pool.
Yes.
So I was just like shaking at the knees to tell my insurance guy that.
Correct.
And then he gave me my quote, and then I was shaking at the knees when I wanted to tell him it also has a diving board and a slide. And I thought he was going to like triple my policy or something like that, but I guess that kind of stuff doesn't play that big of a factor anymore.
No, and one of the important things, it factors in a little bit, but when the major real importance of that is your pool fenced in.
It is.
And so that's the important thing. Does it lock? Do the gates lock on it? Are you able to keep people out, so to speak? So that's
it will now.
Yes.
Oh yeah, master locks are going on that thing.
Yes, that's not a bad idea. I recommend that to anybody that has a pool. You want to make sure you have little kids around you that are curious. And
so if I ever had to claim, or if I ever had to go to court and I could say, yeah, there was locks on there and they broke them or they jumped the fence or something, I would be better off.
Your story would definitely seem better as opposed to someone going, yeah, I don't know, the pool was open in the backyard and we went on out of town. I saw some kids playing down the street. I didn't think anything of it, and you left your gate open, and now the kid's little brother happens to walk down and you got a whole another situation.
Oh my gosh, I've heard that I'm not responsible for the criminal acts of another. It sounds like.
Yeah, but you've heard those stories where criminals will actually sue the owner of the home that they broke into because they were injured during their
they
crime
cut their arm when they fall.
Yes, from the glass. So we all know how that goes.
And when it's going to what you were saying, though, too, I'm sorry to jump topic here, but as far as a home or having a pool, and I don't know if your insurance carrier talked to you about this or your agent did, but did he recommend an umbrella policy, a personal liability policy to you? Okay, that is one thing I always highly recommend doing as far as if you have a pool.
When I just got married, we did like this whole crazy insurance like re-evaluation or whatever, and we ended up getting an insurance or an umbrella policy.
It's a very, very smart move to do that, especially now that you're getting a home with a pool.
We needed one to cover this dang ring,
Yeah.
Right, and that is coming up. Don't you worry.
Yeah.
Okay, good. What's next?
So what about those premiums? High crime areas, it obviously is going to be affected, right?
Correct.
Knob and tube. So we know knob and tube is a problem as far as some insurance carriers are concerned. Some will not even insure you if the home has knob and tube wiring.
And it's actually getting to the point, because underwriting is ever evolving, that almost everybody's in that case where they're not. Companies that you're already with the knob and tube and you're grandfathered in, you're fine with. But as far as the underwriting and companies kind of changing their view on it, because obviously more time is continuing to lapse since that has been a thing.
Okay.
I mean, that's a huge hazard. And there's so many homes, everywhere. It's a big thing now. I mean, you see so many houses out there. You guys are in real estate.
Yes.
People go through and they revamp everything, and just to flip the house. They update the kitchen.
So what if you don't know there's knob and tube? The house burns down. The adjuster says, there was knob and tube here. Is it possible, if that insurance carrier doesn't naturally cover knob and tube, that they deny the claim?
It could be a possibility. It would be coming back on the inspector as well to not have noticed that. He should know where to...
So now we're just going to go a big circle, because the inspector's going to say, how was I supposed to know unless I took out all the drywall? Because they... and I found this in my home where they did the updated wiring, and only behind the walls and we knocked it out because we were rewiring some stuff, did they connect it to the knob and tube. But you would never have known that.
Yeah, a lot of time they only replace the knob and tube like where they can see it in the basement or the attic. I find knob and tube to be really interesting, because I think that sometimes people kind of lie to their insurance person about whether they have knob and tube, so that they can, I guess, either get insurance or be cheaper insurance, because you can always get insurance, but so they can get cheaper insurance. And I'm like, you're crazy, because then every month you're paying insurance, and then 10 years from now your house burns down, quote unquote, because of your knob and tube, and then they deny it. And you've just been paying this money for the last however many years.
Let's not talk
for
about
no
the mortgage.
Reason.
Yeah, that they have to still pay off.
Yes.
Yeah. Well, now they have no insurance.
Yes.
Because they lied about their knob and tube. And like you just said, I was talking to somebody about this recently, and they're like, well, I don't know. The insurance company came out and looked, right? And so if he either missed it or didn't know or whatever, then you're saying that now the homeowner would have to probably sue the insurance company to get them to blame it on the guy who did the inspection?
Or even it could go far back as the contractor, of not doing it properly, ordering the permits, because they're supposed to have things done and have inspected as they move throughout
but
the process
that's like
of a
the
home.
Insurance companies, they would deal with that later, right? Wouldn't they pay us but then go after the contractor?
Correct. They would go subrogate it and try to go to battle for you guys.
Okay. So does it increase premiums then?
It does, especially now.
A lot?
I wouldn't say huge amounts as far as the companies out there. I mean, the worst case, obviously, is you're not going to be able to get insurance on the house. But going to Adam said, people are going to fortunately lie about it and things like that. But no, I mean, I don't foresee a huge increase as far as having some unknown.
Knob and tube.
Yeah.
Okay, so what about bars on the window? I heard this was a problem.
It is.
Now, especially in the city, there's a lot of houses that have bars on the windows, especially the basement windows.
Correct.
Why is this a problem?
Because if you think about that, especially the basements that don't have any other way out, so you got to think of the liability. What happens if a fire's upstairs and everybody goes? Now your family's trapped in the basement, and your only way out of the house is through a window, and you break that window, and now there's bars. and you can't get out. There's no other way for you to get out of your basement. I see from a security standpoint, you know, you have stuff down there. You don't want somebody coming through in the middle of the night, kicking your bottom window and stealing all your stuff out of your basement. But it's a huge liability when it comes to homeowners insurance from when they will go out and inspect the house that they're insuring for them.
Interesting. Okay, so it has nothing to do with that. It insinuates that you're in a high crime area, meaning that if you have like your air conditioner in a cage, you don't necessarily charge more insurance because of that.
Correct.
Because that would indicate you're in a higher crime area. It's because of safety.
Yes, 100% because of safety.
Okay. So if it was a walkout basement, does that
A lot of times it
cover that issue, or is it like?
You mean if there's so you can walk out the door?
So you can walk out the door, but the door is like
windows
all the way in the back of the house. Now he's probably going to say to me, "Well, what if you're stuck at the front of the house? What are you going to do then?"
Correct.
So bars on the window.
Typically,
Are clients supposed to say, by the way, there are bars on the window? I never would have thought to say that.
Yeah.
I actually have them on my window.
Yes.
But so.
And as far as an insurance score goes,
or you guys come out and look at the house,
correct.
right?
As far
so
as that
they
goes,
should note that
everything's pointed. You know, so if everything on the house seems to be there, and you're not, and I hate to use the word ding, but you're not getting points for the negative things on the house on the inspection, then we would go ahead and cover that. If that was the only thing wrong with your house, your
Bars
roof
on the
looks
window.
good, you know, the house is maintained, there's no debris, there's nothing that would look like a huge liability, it would be something that definitely would still be insured.
Man, I used to think I would want an insurance company that didn't come out and do an inspection, but now I'm like, please
Yes.
come do an inspection. Please take the liability from me and take it to you.
Kind of.
Yes.
I mean, I guess it's worth just being honest instead of trying to hide these things, because you're going to, if you use the insurance, probably going to figure this
Well, yeah,
out.
and like you said, going back, and one of the things we hoped, you know, to get people that would lie about that is when we do have the inspections and go out and look at the house, you know, they say, oh, no, everything's great. Well, you go out and they have a rusty trampoline in the backyard, and there's
Trampoline.
you know, the old broken down deck that just boards are piled up, you know, with nails sticking out, and there's debris everywhere. There's no hand railing on your front porch. You know, these are all things that are going to point against you, saying, wow, there's a lot of hazards here for someone that could get hurt on this property.
Speaking of, do you actually increase premiums if someone has a trampoline?
It's not recommended to have a trampoline. It's kind of like the swimming pool thing. If you do have a trampoline, it should be enclosed in the backyard.
Enclosed as in
In a fenced-in yard.
in a.
Well, you can hear horror stories of kids getting tangled up.
Oh,
or
every
breaking.
doctor hates them.
Oh, absolutely.
Absolutely.
I don't recommend
Hate
them at all.
They hate them
them.
or they love them because there's all their business.
I just tell people go to Sky Zone. You go,
No.
There's trampoline parks. You don't have to need one in your backyard.
There's a trampoline on the house I'm buying. The first thing I'm going to do is take that thing down.
Yeah, you don't need it. You just have to move it to cut the grass anyway.
Yeah, what am I going to do with that
It
thing?
is. Okay, so in regards to the credit factor, one of the things I read was that there are some states that require insurance companies to take into account financial hardships. So let's say like divorce, death, or disability of a spouse, unemployment.
That was a great question.
Is Missouri one of those states?
It is not.
Okay,
That's a unique
so
question.
it's just if you're screwed, you're screwed. No matter what the story is.
Yes,
on
not
your-
to use those. Yeah,
But-
so to speak, you are.
But there are a lot
Yes.
of people. You wouldn't believe how many people have poor credit or credit damage because of medical bills.
Correct.
And that's the only thing that really has brought them down. But we don't see that as a hardship in Missouri.
Correct. I know I'm in Missouri and Illinois, and that is not something we are specific to.
Meaning to us, a credit score is a credit score, and to some states, a credit score is
Not a credit score
it's
necessarily.
like a credit score. But hey, it's because of this or that.
Because of a divorce or your medical, major
Financial
medical.
hardship, basically.
Okay, that kind of makes sense. I mean, your credit score is your credit score, right? And how are you guys supposed to evaluate that? And
Well, then I guess it does. I
That's why
guess it
it's-
does make it a little bit more
It's probably
like
more
white versus the gray area of a financial hardship, and
correct.
trying to evaluate that, and
Then you're probably getting a
adding
whole
human
legal
factor
mess,
into it,
you know,
yes.
saying, "Well,
I
how
can
come
see that.
them? What about us?" You know, and
All right.
so I know Missouri that is not true.
Okay, so if someone buys a house and initially their credit score is maybe lower than desired, however, they work on it, it increases. Can they come back
Absolutely.
and say reevaluate? My recalculate?
Absolutely. We can go ahead and do a whole evaluation and go through the house line item by line item, actually redo the quote form and see if we can get them a better rate. And if that's the case, then we'll go ahead and do that for them.
With the credit
Absolutely.
score.
Absolutely.
Just hope they don't come over and find a trampoline.
Yeah, it's like, I don't know that I want you to come over because
can you not come over for that part?
Don't put a trampoline in your pool.
Awesome. Nightmare for the insurance agents. So can you tell us about any claims that were denied because of neglect of homeowners?
The neglect on the homeowners?
Yeah, like say there was a leaky roof that maybe they didn't fix, or animal damage, that was because a squirrel got in and ate up, they love to chew up wires.
Yes. And you're responsible as a homeowner to maintain your property and maintain a livable condition, so to speak. Mm-hmm. That being said, you're not always going to know those squirrels are in your attic chewing your wire and stuff like that.
So if you don't know, is it then covered? Because
yes, it is. So like a good example of like neglect, let's say we have a huge rainstorm and a tree falls, through your roof, and you guys just leave it there and it rains 3 more times, and you're sitting there going, well, how come you guys aren't fixing everything? I got water all over my house. You didn't take any extra measures to go ahead and protect that. Cover it up, call somebody, call your insurance company. You just let it, well, I know it's going to rain for 3 or 4 more days. We'll just let this. You should have contacted us or at least done something to prevent further damage. Same with like a hole being in a roof. All of a sudden you get a hole in the corner of your roof and your bedroom upstairs is constantly getting wet in that drywall. And you know about it. You're just like, oh my gosh, it's raining again. It's getting all wet up there. Hoping nothing happens. Just put some fans up there. Well, all of a sudden you're coming after the fact 2 years later. Now it's down to the first floor. It's been rotting all that drywall and boards in there. And you knew about it the whole time. That's a neglect. You didn't do anything to fix that, prevent it. So in that case, yes, a claim would be denied.
Okay.
That seems fair.
Yeah.
Can I ask you a quick question about,
Yeah.
I'm on all these like Facebook neighborhood groups, and I see people that talk about, my neighbor's tree just fell on my garage, for example, and damaged my garage, or damaged my fence. Who's responsible?
Most of the time, it's the neighbor's tree that would fix it.
The neighbor whose tree it was.
Yes.
Has to fix.
Yes.
And their homeowner's insurance would cover the neighbor's garage.
I just had this happen with my dad's friend. A neighbor's tree had fallen over against the fence. He was friends with them. Nice enough guy. They two went out there and just fixed the fence themselves. He didn't make him turn it into his homeowner's insurance claim.
What if the neighbor's garage has knob and tube? Oh, now we're really...
With a trampoline in there.
But that is one of those questions, is because the tree... There's some huge trees, and that it's totally 2 properties over, but can easily fall.
Absolutely.
So it is their homeowners.
Absolutely.
What about same thing? In the city we have no more than 3 feet, sometimes between houses. Theirs catches on fire. Fire department shows up. Part of what their job is to create a wall of water.
Correct.
High pressure. And I can't imagine how there's not water damage to the next house over.
Correct.
And I'm sure that there is. Who has
that would all be relative to the claim. Whatever caused the issue.
Whatever caused the issue.
Correct. Would typically cover all that.
And if they don't have enough, then then your
you're
own
going to have a mad
kicks
neighbor
in.
and probably won't be friends with them ever again.
Oh, yeah. Well,
you guys will hate each other forever.
Probably.
But if the neighbor doesn't have enough insurance or doesn't have any homeowner's insurance, then our insurance would jump in, I would guess.
Yeah, but you would also we'd look at suing them,
right.
As far as trying to...
And you mentioned something like that earlier. Does the insurance company give me the money and then they go after them so they can get their money back? Or do I have to wait around for the money while you guys are trying to sue? I shouldn't say you guys. While the insurance companies are trying to sue. A
lot of times insurance companies want to make it as easy as possible on you. Less hardship on you, the more they can do. Now, that being said, if they're unable to subrogate or get the money from the other insurance company, then that's unfortunately going to fall back on you as far as being hit with a claim.
Can you say that again?
I said, so as far as that being said, if they're unable to subrogate the money, so say if you, like you said, the guy next door didn't have a homeowner's insurance and we're trying to get the money back from him, we're having no luck as far as suing him. We got our lawyers, we're doing everything possible. That money, it would still show up as subrogation in there that they went ahead and made the attempt but that would still fall as far as dinging you.
It still dings
So
us.
I would
My
still get the
premium
money
goes up.
from my
Yes,
insurance,
you would-
but my policy would go up.
Correct.
Okay, and it would probably go up anyway because you
Correct.
guys just had to spend a ton of money on attorneys and stuff. I would think.
Correct.
So let's talk about a couple of things that I think that people don't realize about policies, and I think this is pretty standard, is if you have a sewer backup or your sump pump fails.
Correct.
You kind of think of this as something that's just damage to a house, like an overflowing bathtub or something that just happens out of your control, but that's not typically covered.
Correct. That's always added. And one of the questions I typically go through is when I'm doing someone's home analysis is finding out if they have a basement. Yes, obviously. Is it finished? That's an important question. Then if they say, yes, it's finished, is it a walkout or is there no way out in that basement?
I don't remember any of these questions.
Typically, if it's a walkout, is your basement finished in your home?
Yes.
Okay. Typically, then do you have a sump pump down in your basement?
Yes.
Okay. Do you have the water backup coverage on your home?
No, because I didn't realize, honestly, until I read through my
Yes.
policy in prep for even this,
Yes.
that sump pump, if that sump pump fails for some reason, that was not covered.
Correct.
I wouldn't have thought about that.
And you can go
But then
ahead-
I realized you guys actually have an extra policy that's
Exactly.
like $38.
It's super
or something
cheap
like
to
that.
add
Yeah.
on there. So that's something that's totally be.
So something else that I brought up to you today that I thought was interesting is, because this is a scenario that I think happens a lot, especially for sellers, is they buy another house, they move out, and then they leave their house vacant. And if the home is burglarized, let's say the copper disappears, it's not covered after 30 days.
I did a little more research on this because
Okay.
me and you talked about this
Yes.
briefly this morning and was actually talking to the branch manager at my office about it. And he said in those instances, insurance companies aren't going to insure a vacant home. As far as if you're just saying we're buying a home, we're just going to leave it vacant. They're not going to want to take that risk with nobody moving in. That being said, you had a policy on your home. When you purchased your new home, it would still be covered.
Wait, so you cannot get vacant home insurance?
You can, some companies out there will cover you, but not all companies want to take on the risk of insuring a vacant house.
Okay.
Because there's no one physically there to protect it. Okay. A lot of times they'll do it, and the inspections will ask, is the home being rehabbed? And you can put yes in 6 months. They send an inspector out there between the time, like about halfway through, and then at the time to make sure that construction's done. And you can actually add that onto your policy as far as materials to do the construction on the home that would cover that stuff. But as far as just if you wanted to go out and say, hey, I want to buy these 7 houses down the street, I just want to buy them. I'm going to hold on to them. I'm not going to do anything with them for a while. I just want them. They're not. A lot of insurance companies aren't going to want to take on that risk as far as you doing nothing about keeping those personally protected. That makes sense?
Yeah.
Okay. So then back to the personal articles thing, because I think this is something that
Yes.
people don't realize, is that those personal articles, the things in our home are becoming more expensive. High-end computers, nice cameras, these smartphones,
Yes.
our jewelry, furs are not necessarily covered.
No, and you can get those things covered for $50,000 on the home computer app that covers all your iPhones, your tablets, stuff like that. Also, that being said, I think one of the questions you had in there too is, how do we know we have all this stuff in our house?
Yeah, so how do we go about inventorying and understanding as far as the personal items?
Correct.
Obviously, the dwelling itself, you can figure out. But what about our personal articles?
And that's a great question because we actually have a home gallery app now. So you can download an app on your phone and you can go room by room and inventory and take pictures and upload everything to this app. And now is on your file with Liberty Mutual.
Oh, what's the name of that app?
It's Home Gallery app.
Okay.
I'll show it to you when we're done here. I have it on my phone.
And I've heard of people like walking around taking a video of
Yes.
them, just like walking around the house like, here's
Yeah, so
my
in the old
ring.
days, you
Yes.
just walk around with a video camera and then go put that in a separate location.
Where
But
this is-
now, though, I mean, jewelry, expensive watches, none
Yeah.
of that's covered.
I was going to say it's funny because the big stuff that's out, like your TV, that ain't worth anything, right? It's the stuff in the drawers,
Correct.
like your jewelry, whatever. That's
And you're
worth
always
something.
covered for about $2,500 for jewelry. One thing I recommend, you can actually purchase it through your homeowners and policy. It's not subject to deductible, but you can go ahead and schedule those items. with an appraisal that's sent to there. You're saying, hey, Tony, I have a $10,000 ring. I want to get added to my policy in case my grandmother gave it to me. The stones fall out. I want to be able to fix this, get it replaced. It typically runs about $11 per thousand. So you figure if you have a $10,000 ring, it's going to cost you about $110 per year to insure that and schedule that on the home.
Okay.
You can also buy that. I always tell people another option is you don't necessarily have to do it through us, but a lot of jewelers out there now offer that.
Oh yeah, mine's
as an
always
insurance policy. So
sure.
Some people just don't want that because then if that happens, it dings you just like a claim would. It would hit your file as far as filing a claim.
But I don't think even like high end bicycles, like for
artwork.
racers,
I mean, there's all kinds of stuff and that all can be scheduled if you're truly concerned about it. I just had a customer of mine in Columbia, Missouri. He had one of those personal. It was a jet, kind of a one-man plane that had the parachute on it. He spent a lot of money, and he's like, hey, I need to get this thing insured, and it would be covered on his personal property. I said, if you really want to be safe about it, I said, get pictures of it. I said, get everything sent over to me. We can keep it on your file. That way we know about it. You told us about it. If anything were to happen to it, we'll get it taken care of for you.
Interesting.
So we have time for maybe like 2 or 3 more questions?
Yeah.
Do you have some just burning ones that are...
No. Do you have any ones that are burning that you didn't get answered? Otherwise...
Well, I guess I'm wondering, is there some sort of percentage or something like that I can use to estimate what the homeowner's insurance would be? I use a mortgage calculator app on my phone.
Okay.
Carl's mortgage calculator.
Yeah, I use it all the time too.
And I'm like, I'm evaluating how much would my payment be on this home? And I never really quite know what to throw into the insurance number.
And that's got to be a tough one.
Yes, but the best thing, and I always ask just a few basic questions. If you guys, I can typically get you a quote fairly quickly. I can pull most of the information.
But believe me, for all the homes I'm evaluating,
I'm
don't want me calling
standing in the
you.
home, and we're going from home to home. How much would
can I
my
use
payment be?
1% of purchase price? I mean, is it equal to what the tax?
A lot of times, and I think
mean,
this would be more a mortgage question, but a lot of time if you're buying a home, what did he figure in that dollar amount for homeowners insurance? Sometimes, depending on the value of the home, they'll just say $1,200. They figure $100 a month.
It doesn't
not
seem like
knowing what it is, or sometimes it's a little bit higher.
I don't know that there seems to be any rhyme or reason, and that's why I was hoping you were going to give me some. But I've been lately using a number sort of similar to what the taxes are.
Okay.
Which is not necessarily a good thing either. But
yeah. So what are you saying? Like 20% of what the taxes are?
See, I don't even think that works because even I just assume for smaller homes we're talking about $1,200. I mean, I ask my buyers what their quote was or what they ended up paying, and I look at closing just to start in my head random calculations.
I bought a 4-family recently, and I think I'm paying more in insurance on that.
Yes.
Than I am on this new big ass house I'm buying in Chesterfield.
Yeah.
Yeah. So I got a quote from
and a diving board.
Yeah, and it was outrageous.
Yeah.
Is it? So no, there's no. Hey, make it equal to the taxes. There's no exact formula.
Exactly.
Just call you, which is a good segue to how do I call you? By the way.
There's a couple different ways to call me. You can go to anthony.berra@libertymutual.com if you'd like to reach me via email.
Anthony.berra, Berra, at libertymutual.com.
Correct. Or you can also reach out to me on my cell phone. I got 2 numbers to get a hold of you. I make sure I give them to everybody.
Oh, you give out both?
Yes, I give out both numbers so they can get a hold of me no matter when they need me.
Okay.
The first number is 314-922-4912. And the work phone, that was my personal I gave you first. That's how much I care about everybody out there. The second one is my work number, and that's 314-580-4284.
And I will say for the realtors out there that it was way worth the call. I had someone tell me that they saved so much money on homeowners auto, and so I finally called them. I think it was like $1,000, $1,500.
Yeah, the last one they were very happy. Yeah, so they were super excited about it.
So it was a significant difference with that realtor discount.
Correct. And I have a couple different carriers with realtors out there. I know they like to always, for their customers, due diligence by them and, get them a few different quotes. So we have the ability now to shop with a few different carriers for you if we want to get you some quotes as far as that goes. Yes, we do.
Who else?
We have MetLife now. We can write through Progressive, Foremost, Dairyland. There's a couple other ones that are possibly coming down the pipeline. I'm not to disclose to you at this point, but going to be some other options that'll be good for the,
awesome.
yes. So you guys will really be happy about all that, knowing down the road that he'll take care of you.
Any other questions, Shannon?
No.
Well, you have 1,000 more questions, but you're going to let me wrap it up, it sounds like.
Yeah, I have 1,000.
You guys have been awesome. Thank you for all the
Anything else you want to
questions.
say before I jump into the 5 questions that I ask all of our guests?
No, absolutely not. I just appreciate being on the podcast today. Was this podcast number 34?
Yeah.
And he didn't bring it up, but it's Adam's 1-year anniversary. Is it today?
Yesterday.
So yesterday.
Yes.
So we get to spend the day after his anniversary with us, which is
That's why
awesome.
I have the big smile on my face.
Yes,
Thank you.
yes. So, congratulations.
Thank you, sir. Thank you. All right, 5 questions I ask everyone.
Okay.
Who lives under your roof?
As far as the names of the people that live under my roof?
However you want to answer it. One guy said 2 people and a cat.
That being said, I got there's 4 women and 2 males. Me being one of the males, one of the other males being a dog, and
Okay.
so I got a wife and 2 daughters, and we got 2 dogs, and so yes.
Okay, congratulations.
Thanks.
So where are you your best?
Where am I my best? Wow. That's a great question.
I'm sorry I didn't send the
any given moment, where am I my best?
Answer it however you want.
I guess wherever I am.
Wow.
I always try to be
I
my
like
best
that.
wherever I go. So
like that.
so
Good call.
Yeah.
Good answer. All right. Do you have a favorite blog or podcast?
this.
That's ours.
Yeah, I mean, you guys have really kind of trumped everyone out there. I'm definitely going to be following these podcasts here.
Okay, but so you don't read any certain website every day, or like what do you like to?
I do a lot on Facebook, social media, stuff like that. Just kind of, I'm not as active with the social stuff, but I'm a little bit nosy out there, kind of reach all the avenues.
those.
And,
Do
correct,
where
yeah.
life takes you.
Find
Okay.
something that sparks an interest, and I kind of follow it.
What is your guilty pleasure?
My guilty pleasure is, oh man, wow, this is you really came out of a question with all these. This is going to sound super cheesy, but selling insurance.
Oh wow. Okay. That's fine. We'll let you get off without giving us a blog or podcast or a guilty
right.
pleasure. Okay. And number 5, the last question: who is your mentor, and how have you thanked them?
Who is my mentor? I have a few mentors.
Okay.
My father's a big mentor in my life. Don't know if I thank him as much as I should, but me and him actually, we have the same birthday too.
Okay.
So my dad means a lot to me, and he always told me growing up, heed his advice, and he was never really wrong with that. So I feel like now that I'm a father myself, I'm constantly thanking him for everything that he taught me growing up, and kind of take that and make myself and try to be a good father to my daughters.
Awesome. Okay. So thanks again, Tony, for being here.
No problem. Thanks for having me.
Just give us your email and your phone numbers one more time, if you don't mind.
Okay. The email is Anthony, ANTHONY, .Berra, B as in boy, ERRA, at libertymutual.com. And the phone numbers to get a hold of me are 314-922-4912 and 314-580-4284.
Awesome. Thank you very much. And for everybody listening, please don't forget to follow us on iTunes and YouTube and send questions to podcast@hermanlondon.com for future episodes. And if you have any real estate needs or want to become a realtor, please contact us by calling 314-802-0797. And actually, if you have any real estate needs, I think you should just skip calling our office line and just go straight to Shannon St. Pierre.
Yep, I can do it.
Yeah. What's your number, Shannon?
314-583-0070.
Are you Shannon at hermanlondon.com?
No, Shannon.
I think it's Living Tower.
Yeah,
Oh.
He knows my email better than you. My broker.
I just go straight to, it's all saved in there.
Now,
Please edit
Shannon
this.
at livingtowergrove.com.
Shannon at livingtowergrove.com. All right. Well, thank you both for being here, and we'll
Thank
see you
you.
all next time. Thanks again. Take care.